Hello, and welcome to another update video about Bitcoin. Well, the current sideways range continues to be frustrating. That is not unusual for cryptocurrency corrections. They tend to be very frustrating in the short term. It's not always exciting in the markets, okay, and most of the time, really nothing happens. As you can see here, if we look at the Bitcoin daily chart, those rallies have typically been very short and very swift. This was absolutely a very exciting phase here that occurred between September last year and January. But now again in this sort of sideways range, and you get these from time to time, these extremely, and they are very long, these boring sideways ranges, they take a long time. And especially compared to the elements where we actually had a lot of movement, it's just part of crypto. It's just part of crypto. Really, the market hasn't moved notably actually since, December actually. I mean, we had that one more spike here, but really this was also very frustrating since middle of December. And yeah, it's, and then you can see the actually exciting days, there haven't been many, right? There haven't been many. It's like most of the time the market is actually in a correction, especially in crypto, because the rallies are so aggressive that the corrections take a long time. Similar to the metals market, but crypto is even worse. So it's just that even the rallies in the metals market can be boring compared to crypto. So it's you always need patience when you look at gold, silver, and everything. But crypto in a sense is similar. It's just much more exciting. I mean, daily chart, no change. Yeah, no change on the daily chart for Bitcoin. Maybe it's worth looking at the weekly chart as well. The vertical lines show you roughly the halving. I haven't positioned them where, I think it's May now, isn't it, the halving? Haven't positioned them exactly to the day, but roughly where the halvings were, where the halvings are. Just watching sort of for, obviously for further upside here long term. This is really the long term view. Disregard the timeline, but it shows you where we are in the wave cycle. The current rally to all-time highs, which ideally lands sort of in the region 125k, 150k. That should be followed by a larger wave 4 correction again. So I see the next bear market at least as, substantial as the previous one, because it is also a wave 4. The previous one was a wave 4. The next one is likely going to be a wave 4, and it's a larger wave degree. So it makes sense to assume that it will take a long time again. Could be quite brutal. As I said, it's a larger wave degree. So it's actually the wave degree here of this 1-2 setup that happened in 2016. And the wave degree is more substantial than, the previous one. So we need to be aware that it could be a substantial bear market again, possibly boring, possibly scary. That means consequently get rid of all your altcoins at the end of the bull market. Now, at least I'm going to do that. What you do is obviously up to you. But we know that, there are always bear markets, and these can be brutal in crypto. Then people will highlight that, due to the ETFs and everything, prices can only go up. Well, that's not really the case. Yeah, that's not really the case. I mean, the ETFs really only have to buy and sell cryptos, to the degree that people actually invest in them, okay? So it's still crowd sentiment, but also what you need to be aware of is that obviously these ETFs, they take away supply. So I mean, there will be less BTC on the markets. Then people tend to think that is bullish, because, what you learn is less supply, prices should go up. But you forget about the demand side. So demand, obviously, you only get rising prices if there is high demand and people still buy. If everybody has a position and nobody wants to get a position, I mean, you can have very limited supply and the prices will still start to go down, right? If everybody who wants to have a position has a position, that doesn't mean that the prices won't go up further, okay? So it's always the demand side as well. And the thing is, if supply is limited, but nobody wants to buy anymore, what does that mean? It means volatility is high, or the chance is high that there is a lot of volatility. Why is that? Well, guess what? Because volatility works in both directions. People say less supply, that means the price goes up quicker. yeah, if demand is high, or at least the same, but if everybody has a position, and people won't just continue to buy, there are prices where it will get exhausted. And when there is very limited supply and people start to sell, well, that means that the volatility also works to the downside, and we get quite brutal downside movement. So it's all about the volatility. It works in both directions. But anyway, so that's just for a long-term outlook. I wouldn't be surprised if then in the next bull market we see like 500K, but that is still far away. That's a long-term outlook, so that might still change. A lot of things will change along the way. This is not set in stone. Markets are non-linear and dynamic, but so far it's working. Looking at the daily chart, again, as long as we're holding 35K, we're focusing on higher. In the white count, below 35K, I've got my alternative yellow count that allows for a deeper pullback, but it would still be in a bullish scenario. It's an ABC structure in which we can also, as per the weekly chart, move higher, right? And this ABC structure here is actually white on this chart. You will ask, okay, why ABC? It has to do with the idea, again, it's only the alternative, that the move from the 2018 lows is an ending diagonal. So then the wave 5 of that fifth wave would also have to be an ABC structure. Looking at the short term, that's basically here the 1 hour chart. Bitcoin sideways range continues to frustrate. So there's really not much to add. I mean, the market has recovered a little bit since yesterday. You see that, but you can also see that we haven't broken out of the range. So the idea is still that we have 5 waves up into the 30th of January highs. Then a corrective pullback. Yes, the move is corrective, but rather sideways oriented. So, I mean, I'm still leaning towards downside because I haven't seen any clear impulsive structure to the upside since we finished these 5 waves on the 30th of January. So for me, it would be ideal to say this was the A wave. Maybe this was the B wave, and we're now coming down in wave C and have a 5-wave move. 1, 2, 3, 4, 5. So current rally could be a wave 2 as long as we stay below yesterday's high at 43,550. We could be in the C wave to the downside, targeting 41,620 to 40,475. But it's also possible that the B wave, and I've added these trend lines, I mentioned it yesterday in one of the videos, but if we see lower highs and higher lows, it could indicate a triangle. That wouldn't really change much. It could just mean that the B wave will be delayed, the completion a little bit, and the B wave could be a triangle. See, that's a possibility, but I don't really see a very clear triangle count yet. So from a wave count point of view, I don't have a triangle count ready, really, okay? I mean, best I could say there are not really anything that's reliable. So this could be an A wave, this could be B, C, but the C wave went a little bit too high. Now it might still be valid, but then D, and this could be E, and we could break down. Alternatively, wave C is still in the making or something. It's weird. No, because normally you can't go above the A, so it would all drag out a lot. So I don't really like the triangle count, yeah? I'd rather see it as a normal ABC, and then, yeah, maybe the C wave has started, or even a WXY pattern. Often you find that what looks like a triangle eventually turns into a WXY or something. Anyway, as long as we don't get, it's very simple. As long as we hold above 39,605, I'm looking at higher prices, but we have to give it that space to account for the potential, amount of corrective patterns, variety of corrective patterns that could unfold. So I'm bullish here because we have 5 waves up. I will turn short-term bearish below 39,605. A break above the trend line here, the neckline, would confirm that bullish perspective. And that is at around 43,900. So we would need a break above that level to confirm that bullish perspective. That breakout can happen more directly in the orange count. So it would be a more direct 1, 2, 3, 4, 5. Or we get that dip down and then the rally. So I think that summarizes it quite well. Bullish against 39,600. The closer we get to that level, the more of a pullback the market offers, the better the reward to risk ratio. It's possible to get a bit of a dip, but it's also possible to get a direct breakout. But both are bullish in the short term against 39,600 support. And the breakout point is quite clear. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.